There's a financial disaster coming that will wipe out millions of people's savings. And no, it's not a stock market crash, it's not crypto, it's not a recession. It's something far more devastating and far more predictable. In the last 100 years, this disaster has struck 23 countries, rich countries, stable countries, countries where people said it could never happen here. And every single time, two types of assets went to absolute zero, completely worthless. But five types? They didn't just survive. Owners became wealthier while their neighbors lost everything. The pattern is so consistent, so mathematical, that once you see it, you can't unsee it. And today, that pattern is forming again. The question is, are you holding the assets that survive or the ones that go to zero? Economic collapses follow a script, a predictable mathematical pattern that's played out across continents and centuries. Weimar Germany, 1923, Yugoslavia, 1994, Zimbabwe, 2008, Venezuela, 2018, Argentina, 2001, Lebanon, 2023. Different countries, different decades, different governments, but the same five assets survived every single time. And the same two asset classes, the ones financial advisors call safe, got completely obliterated. Here's what makes this pattern so dangerous. It doesn't announce itself. In 1913, the German mark was one of the world's most trusted currencies. 10 years later, people burned it for heat because it was cheaper than firewood. In 2013, Venezuela had the largest oil reserves on Earth and a stable currency. 8 years later, a teacher's monthly salary couldn't buy a kilogram of chicken. The collapse doesn't happen because of bad luck. It happens because of a sequence, 5 stages that repeat like clockwork. And once that sequence starts, the window to protect wealth slams shut fast. So here's the question that actually matters. When the pattern shows up in your economy, will you be holding the assets that survive or the ones that evaporate? Because history has already given us the answer key. We just need to pay attention. Let's start with the brutal truth. 2 asset classes people bet their futures on, annihilated. Number 1, cash in the bank. Obvious, right? But here's what's not. It's not just hyperinflation that kills savings. It's capital controls. Cyprus, 2013. People woke up unable to access their accounts. The government froze them. When they reopened, anything over 100,000 euros, gone, confiscated to save the banks. Argentina, 2001, the Corralito locked everyone out. Protests, riots, people starving with money in the bank they couldn't touch. Your cash isn't just vulnerable to inflation, it's vulnerable to a government deciding your money is their emergency fund. Number 2, government bonds. Wait, aren't bonds the safe investment? Tell that to Russians in 1998 when the government defaulted, or Greeks in 2012 who took a 50% haircut on guaranteed bonds, or Argentinians who've watched their government default 9 times. Government bonds are IOUs from the entity that controls the printing press. When things get desperate, guess who doesn't get paid? You. Okay, so cash and bonds are out. What actually works? This is where it gets interesting. Because the 5 assets that survived, they all share one characteristic. They exist outside the government's control. They're either tangible, mobile, or impossible to confiscate. Let's break them down. Asset number 1, physical gold and silver. I know, you've heard this before, but here's why it works. In Weimar Germany, if you had 1 ounce of gold in 1918, you could buy a nice suit. In 1923, after hyperinflation destroyed the mark, that same ounce of gold still bought you a nice suit. Gold didn't gain value, it just didn't lose it. But here's the critical part. It had to be physical. Paper claims on gold, those got defaulted on. Gold in a bank vault, sometimes confiscated. Gold coins hidden in your house, that's what saved families. Same with silver. In Venezuela right now, people are using silver coins for transactions because the bolivar is worthless. The lesson? Precious metals are the ultimate nobody can print more of this asset. Let's continue with asset number 2, productive land and real assets. Here's a wild story. During the Yugoslav hyperinflation in 1993, a farmer with 10 acres and some chickens became relatively wealthy, not because land prices skyrocketed, but because he could produce food. When currency collapses, people still need to eat. They still need shelter. And if you own assets that produce necessities, you have leverage. But not all real estate survives equally. A luxury condo in a collapsing economy? Worthless. Nobody's buying. But farmland, a rental property in a stable area, tools and equipment, those hold value because they generate utility. The key word is productive. A Rolex might hold value. A tractor definitely does. Asset number 3, foreign currency and offshore assets. This one's controversial, but it's historically undeniable. When the Argentine peso collapsed, people who had US dollars were fine. When the Zimbabwean dollar imploded, people switched to USD, South African rand, or euros. The trick is diversifying outside your home currency. If you're American, holding euros or Swiss francs. If you're British, holding dollars or yen. And offshore assets? I'm not talking about shady tax evasion. I'm talking about legally holding assets in multiple jurisdictions so that if one government goes rogue, your entire net worth isn't trapped. Think of it like this. If your house is on fire, you want your valuables in a different building. Asset number 4, stocks and companies with international revenue. Wait, stocks? Don't those crash during economic collapse? Yes and no. Here's the nuance. Stocks in domestic companies that rely on the local economy, they get crushed. But stocks in companies that earn revenue in multiple currencies and operate globally, they often survive and even thrive. During the Argentine collapse, local stocks denominated in pesos got destroyed. But Argentinians who owned shares in American or European companies, they were protected. Why? Because a company like Coca-Cola or Nestle doesn't care if the peso collapses. They earn dollars, euros, yen. They're insulated. The lesson? Own businesses, not just currency. Asset number 5, skills and human capital. This is the one nobody talks about, but it's the most important. In every collapse, the people who survived best weren't the ones with the most money. They were the ones with valuable skills. Doctors, electricians, plumbers, mechanics, people who could fix things, grow things, build things. In Venezuela right now, a skilled tradesperson can earn in dollars or barter for goods. A former office worker with no practical skills? They're struggling. Your skills are the only asset that can't be confiscated, inflated away, or frozen by a government. Invest in yourself. Learn to build, fix, grow, or heal. It's the ultimate insurance policy. So here's the bottom line. Economic collapses aren't random. They follow patterns. And the people who survive aren't lucky. They're prepared. They don't keep all their eggs in one basket. They don't trust that it could never happen here, and they sure as hell don't assume the government will protect them. The 5 assets that survive, physical precious metals, productive real assets, foreign currency, international stocks, and skills, they all share one thing: resilience. They exist outside the system. They can't be printed, they can't be easily confiscated, and they provide value no matter what happens to your local currency. Now, I'm not saying the dollar or pound or euro is collapsing tomorrow, but I am saying that every currency in history has eventually failed, every single one. So the question isn't will it happen, it's when it happens, will you be ready? Diversify, learn, prepare. And if this video made you rethink everything you thought you knew about financial safety, hit that subscribe button because we're just getting started. Drop a comment with which of these 5 assets you're prioritizing first. Let's build a community of people who refuse to be victims of the next collapse. Now go, diversify before you're forced to.